Hey everyone, what's up? What's up? Welcome to today's Wednesday Zoom session. So, just a recap of what we covered on Monday and how things are panning out so far. But before I get into that, I'm still here to remind you that we're still funding traders and we're still looking for traders to fund. So, if you're interested in the funding program, the masterclass program, we're still looking for more and more traders. So, if you're interested, please hit us up and we'll be getting back to you, telling you how the program works, and what is needed from your side. Apart from that, we said we have our 20% off. So our 2.5 book now is going for 2k, 2,000 Kenya shillings. So if you're interested in any of our products, our subscription package is going for 2,800. That's from 3,500, and our legendary course is going for 44,000. So if you're interested in any of that, please let us know, and we'll contact you and let you know what to do. Apart from that, those are the main things I wanted to start by, just to tell you that we're still funding and we're still looking for more traders, and we have our 20% off, which will be ending at the end of this month on the 30th of November, which I think is next week, or I think the other week after next. So apart from that, the markets, we're still seeing the dollar dropping off the roof, and the markets have been really choppy. So if I just get into what I am seeing this week, just a recap of what we covered on Monday. I remember I covered about 3 pairs. I covered dollar index, and I hope you can hear me. As usual, if you have any question, please let us know. Just before I start, I see Charles saying, I completed your book. It's worth having it next to me all the time as an investor. Thank you for the compliment. That book, we worked on it for about 2 years. So if you're interested in the book, Understanding Forex Market, we've compiled all that we've been learning into this book. Especially Taras Lawi did a very good part on risk management. So it's really important to go through that. That's where people go wrong, not understanding how to trade using proper risk management. Apart from that, Ken also covered under here psychology of trading. So those two are the most important thing that we have in this book. Chart analysis you can learn from anywhere, which we still have, but the trading psychology as well as risk management is fundamental. Even the traders who come for funding from us, the main thing we focus on is risk management. Psychology is more work on their side. We can't really help you, we can just guide you, but risk management is important. No matter what strategy you have, risk management is the same almost everywhere, because you'll be taking 1 to 2% risk per trade. Even 2 is a lot, 1% is a good number. So you'll find across the board most traders are using that, diversifying their portfolio and all that. But apart from that, purchase the book in order to understand what we've talked about. So let me just jump straight into the market. So as usual, I'll cover what I have, and then Ken will come in and finish his. So dollar index, I'll start with it. I don't have much today. I've been really tracking the markets, just seeing what the market is showing me. I've not gotten any clear pattern of where the market is going, and when that happens, I don't force anything. So dollar index also has been moving in a sideways movement. You remember we covered this level last week. So last week is the level that held. So last week we had more or less a bullish week last week. This week we are seeing markets for the past 3 days has really been tumbling down. So we are watching this level. Let's see how that level will be respected for our chart. We had this channel formation. I remember on Monday I was saying I prefer taking my shots at this level, but at the same time I said if that support level on the daily chart is broken to the downside, it will be showing the bigger picture. Don't forget the bigger picture. This level will start being broken and the market can start moving down. So pay critical attention to that. Always remember what is happening in the big picture. So if this level is broken, market continues going downside, then we'll be looking for that market to go further down. Apart from that, I don't have much on that. Aussie dollar, we sort of had a wedge-like formation. The target was hit yesterday. So a pattern that I normally follow is this wedge-like. Let's see no, I don't have it on the 1 hour. So this level over here, if you use simple Elliott wave analysis, you can get to see that this is a simple 1, 2, 3, 4 level, because with the 38.2 it's normally a very critical level in Fibonacci on the fourth wave, and we had this sort of pattern. Market respected it and market has been moving further up. If you go to the 1 hour chart, we sort of had that channel formation as market was going to touch last week's highs. So you can see this level. This was last week's highs, this level over here. It's where market went sort of in this channel-like formation, touched it. Yesterday we saw a drop, but now we're seeing market pushing back up. So we'll be watching this level, just watch it. I'm still looking for a clear pattern for it to form in order to execute any trade. So I never force anything, I just watch patterns that are forming. Yesterday we had that double top. We'll see yet if it will be respected. That's if we get that dollar strength. If the dollar strength comes, then we'll be seeing this market continuing down. But if that dollar weakness continues coming, then Aussie dollar is set to continue pushing to the upside. The 1 week chart has been in alignment for this to happen. If you go to the 1 week chart, there's a level over here I analyzed a few weeks ago. I said this was a strong support. You can see how we rejected this level twice. We had that double bottom and market is still moving up. So if we're able to take away this level, let me highlight it for you. If the market is able to break these highs, then we can see that straight pull. This level that I'm showing my arrow going to is a trend line level I'm expecting the market to go touch. So if I just zoom it out, you can see we had this sort of trend line being formed earlier on. This was back in 2015 or so, 2013. So market formed this level. So this is long term. We can see market can head to that level before we get any major shots. So that's what I'm watching on this one. That's Aussie dollar for you. I'm not a position trader, so I don't pay so much emphasis on the weekly chart, but I have to remember the big picture on what is happening. USD card, also same thing, market respected 61.8. So if you remember, market dropped, we had that pullback, beautiful pullback, then market has really been dropping ever since that level. If you go to the 1 hour chart, it's where we covered the market last week on Friday. We had that double top formation at this level. I sort of kept this trend line, so I'll be watching this trend line to see how it's being respected. So you always have to move with the market. Be very creative when you're analyzing the market using this type of approach of looking at market structure. You need to be very creative. So that's what we're looking at over here. Double top formation, market came down. So the way the dollar has been dropping, also the USD card has also been dropping in line with it. So as well as this one, I don't have any trade running at the moment, so I'm just looking at patterns. When the pattern comes to me is when I normally execute a trade, like we had last week. Last week I had multiple trades because the pattern had come to me and I didn't force anything. So that's basically what I'm watching. I'm sure Ken will cover the rest. Maybe what I can cover last is Dow Jones. So Dow Jones is also a pair that I normally trade, and what we're having is that market has broken above. We had on Monday, was it Monday, where we had news about the Moderna releasing 94% effective corona vaccine. So with that said, the market really shot up, just like we had last week. Last week it was Pfizer who released and the market shot up, and this week now we had Moderna releasing, market shot up, but not with much momentum like what we had last week when Pfizer released theirs. Pfizer White shot that way up is because Pfizer is part of Dow Jones. So if you go and look at your history, do your research, you'll find that Pfizer, that pharmaceutical company, is part of the Dow Jones 30. Okay, so that's why we had that strong momentum. So what I was watching on this one, if you go to this is the daily chart. So you can see daily chart, the level I was watching was this 29,550. It was the previous high. So always make sure you're looking at the previous market high. So this previous high is where we had that resistance before market had that collapse before the when corona came in. So now what I was watching is that we had a spike of this level. Market sort of consolidated around here. Personally, when you remember a few weeks ago, I had a short position which I lost. I was expecting market to respect this level and then continue down yet again. But what we've gotten on the daily chart, paying critical attention to it, is that we had this strong break on the 16th. I think that was Monday. So Monday we had this strong break. Market sort of came and retested this level. So you can see before it was acting as resistance. Once it was heavily broken, market has acted the level now is acting as support. So you have to pay attention to that. And now market can continue moving further up after respecting this. Unless we see a break below this and a close, then we'll expect market to go back down. But as long as we remain above 29,550, we'll expect market to go up. So that's the basic analogy you're looking at. If you look at the 4-hour chart, you get even a clearer analysis. Market broke this strong resistance, this previous resistance, and acted as a support. You can see double resistance, double bottom, and market has been shooting up. So don't be surprised if this market goes to continue forming new higher highs before the end of the year. But that's basically what I have. Don't have much to do, so I'm just tracking the market, seeing what is happening, and also I'm really working a lot with the funded traders and seeing how we can help each other. Apart from that, I can end there, leave the floor to Ken. He'll cover his pairs, and we'll see you guys on Friday.
So morning traders. Unlike Caleb, I do have some positions. So I have around 3 trades actually. So I have oil, I have GBP USD, and I have Euro Yen. So I'm quite intuitive when I'm trading markets. So as much as the analysis has not clearly shown me where the markets are going, sometimes I just feel like the market will go to a certain point, and I like betting on it, especially when the feeling is quite strong. The analysis is always there backing up the feeling, but most times I don't make decisions after everything has panned out clearly. So I'm quite intuitive when I'm trading, and I'll enter some trades even before the signal comes. And that's how I just make decisions in the markets, and sometimes they work, sometimes they fail, but that's normal. That's my style of trading. So I'll share with you what I'm watching, the patterns that I was looking at, how I executed some of the positions I have, and I shared some of those positions with the traders who are in both the funded program and the subscription program. We're up about 50 or 60 points for some of these markets. I'm looking for about 100, 150. Some markets even to the extremes of 200 points. And today's on Wednesday, so I'm looking forward to the markets taking off probably today or tomorrow. If that doesn't happen, then there's a high chance that most of these ideas will fail and the markets may come back. But as usual, your risk is well managed, and that's how you just make decisions in the market. So to start off, I look at oil. Oil is quite interesting. I've been getting some of the moves in this market for quite some time now. So yep, this is oil on the daily chart. So some time back I was calling on shorts on oil. I think we were trading at this level. I expected this market to go back all the way to $25 a barrel. I was right, but very wrong on the targets. So markets came back to 35. 35 acted as a good level of support, and markets have been coming back ever since. I think the positive news about the vaccine and America's elections getting easier and things getting clearer, markets are now pricing in a rally again to the upside. And I think ultimately we could see oil go back to $50 or $60 a barrel very soon. Probably early next year, the first quarter or something of the sort. So on the daily chart, I have this beautiful pattern. So we had a correction, bounced off the 71, 78 or 61.8 extension. So yeah, we got to 78.6, 61.8 was the perfect bounce. Now we are going back. So based on this pattern, I can price in a move back all the way to 48, 47, 45 if I'm conservative and I want to get out before everyone else gets out. So I think there's a high chance oil will ultimately get to $45 a barrel. We are currently trading at $41.4. On the 4-hour chart, there was a very beautiful pattern which I shared on Monday. So the first bounce, second bounce, third bounce. We had a slight correction which was somehow confusing to many, but on the hourly it was a very good pattern, and that is when I took advantage and jumped into this market. So my first target comes in at 43.8, $44 a barrel. My second target comes in at 46, 46.5. So my second target comes in at this level around 46, about 500 points from where we are currently trading. And let's see how this one will pan out. Quite an ambitious target, but if we get here, face some resistance, and we start getting some sell-off, then I'll get out. But if you come with a lot of momentum and have a break of this level, and I'll just keep on holding, looking for these markets to come back all the way to this level. So that's my first trade that I have. I'm up about 60 points from where I came in first. Second, I'm looking at GBP USD. Again, on Monday, I was looking at this one. Shared with you a 50-50 chance of the markets either going higher or lower. But I said I'm not sure, at least for the short term. So once London opened and New York came in, it was quite easy to tell that the dollar is probably selling off. So there are no buyers in that market, at least from the price action. And so when that's the case, I want to bet on it. I want to be in the market. I want to take advantage of what I can see in the market. So on the daily, there was this beautiful pattern, expecting the markets to come back. I think this is ultimately the beginning of the next bull move. So I think we'll get a repeat of this move very soon. So markets may come back all the way to 1.4 ultimately is the target I'm looking for on sterling. So I don't think there'll be much selling pressure on this market to take us any low. So if you're looking for ambitious targets on the sell side, probably you're on the wrong side of the market. On the 4-hour chart, I had a very, very beautiful channel. So initially on Monday, I was looking for this sell-off down all the way to 1.30, especially after this candle. But immediately market started coming back and moving higher. I knew that I was wrong and I needed to reverse my position and come back on the other side of the market based on this pattern on the hourly chart. So on the hourly chart, there was this very, very beautiful third bounce of the channel, and we were pricing in a move back all the way to 1.34 level. So once the market started moving higher, I came in at the 1.3220 level, looking for the 1.34, about 180 pips. Stops came in at 1.3150. And the markets are moving higher quite some points. I'm up again about 50 points, so I'm looking still for about 130. I think the ultimate breakout that I'll share with you. So I'll also look at the dollar, because I think I have a very different perspective with Caleb, and I'd like to share it with you. So I'm looking for the markets to come back all the way to 1.34 level. So that's what I'm betting on. And finally, I look at Euro Yen. So this is Euro Yen again. Still looking for a bullish perspective. I think the ultimate story in this market is dollar weakness. And if you look at it from a weekly perspective, this market has been moving lower for quite some time, but we've started moving higher. And I think this is just the beginning. So for me, I think the trends are reversing. And as the economic recovery comes back, I think the dollar is going to get weaker, and probably other currencies like euro and sterling are going to get stronger just based on the relationship to the dollar. So based on that, on the daily chart, I had this second bounce. I'm still looking for this market to come back to 129, 130 level. That's the level that I think heavy shots can come in. But for now, these small shots, you can come in 150 points and you're out very, very fast. So I'm looking for this breakout back all the way to 126.3, 126.5, about 300 points from where we are currently trading. On the 4-hour chart, I have a third bounce of the channel. So I've just executed this one towards London Open when I woke up an hour ago. So this is the third bounce again of a beautiful channel. Some slight consolidation as we were moving lower. So you can come in fast at this position if you're quite aggressive. But the best entry if you want to be conservative and you want to wait for the market to confirm your hypothesis is to wait for this breakout of this small flag formation. But again, you look at risk reward ratios. If you come in here and your stop comes in below the level, the risk reward ratio is almost the same. So there's no, if you have a strong intuitive feel like I do, you can just jump in before even the market gets to your level, because ultimately you'll have to trade on what you think will happen in the markets. There are no certainties. It's all about the uncertainties, because it still can break out, become a false breakout, and markets go back lower. So it's normal for these things. Once you're trading for some time, you can be able to tell when some of these things will be happening, and you can be able to capitalize on the moves before they happen. So that's Euro Yen. And finally, I've looked at oil, I've looked at Euro Yen, I think I've looked at sterling. I can look at gold. I've seen a pattern developing, not highly reliable, but you can probably make a decision based on it. So again, based on the dollar weakness, I don't think gold should be moving lower based on that. Sometimes correlation fails to work. So the times when the correlations just go to the other side, but there are times when they work. So I like looking at them, but also ultimately look at price action if you're making decisions. So on the 4-hour chart, we have this beautiful flag formation. And you've gotten a third bounce, which is clear on the hourly chart. So we had the first bounce, second bounce, third bounce. Probably gold will bounce over this level, come back all the way to 1915, 1920. But since I have other positions, I don't think it's wise for me to execute this one. So I'm just sharing an outlook which you guys can use in the market if you're trading, if you don't have positions, and if you're looking for risk. So probably your stops can come in at 1870, 1868. So that's about 110 pips from where we are trading. And you can be looking for 1910, 1915. That's 300 pips from where we are currently trading. So risk reward of 1:3. Not bad at all. And you can juggle with that idea and see where the markets will move. So finally, I look at the dollar, and for the dollar, I look at it from a big picture perspective, breaking it down all the way to the lower time frames. So let me start from the monthly time frame. It's good actually that this chart doesn't have anything, so we can break it down with you. So looking back all the way from 2008, when we had the last financial crisis, the dollar was trading as low as 68 points. When it started moving higher, had a slight consolidation, and then we had a breakout, taking us back all the way to 100, 103, 104. Then getting to 103, 104 when Trump was elected, this is back in 2016, markets started selling off sharply, and in 2018 we formed the bottom and came back. So this was probably a correction. So if you're just to look at the patterns developing on the dollar, one, you could have this trend line and sort of a channel, a significant channel, and you could bring it all the way to there. You could also map out this beautiful triangle that was broken some time back. You can see markets moved higher, we had some slight consolidation, then started moving lower. So as you are moving lower again, you need to think ahead of which patterns are developing. And for me, I think there is this pattern, very beautiful channel developing, and using what Caleb normally uses, which is impulse correction. I think this was an impulsive move to the downside. We had a correction back to 78.6, which was well respected at the 100 level, and now markets are selling off lower. So I think ultimately I'll have a bullish perspective once the dollar gets to 84 or 85, which is the first downside target. I think there's a high chance the momentum will keep on selling off, because we had actually a break and a retest, looking at it again from a big picture perspective. So you can see clearly we had a break and a retest of that line, and I think ultimately if this momentum keeps on moving, ultimately this market could come back all the way to 85, 84. So I don't see any reason whatsoever of being long the dollar currently. Going down all the way to the daily chart again, we had this long consolidation, and I don't think the breakout of this consolidation will be to the upside. Based on the big picture perspective, I don't think we'll break out to the upside. Even if we get a move to the upside, it will be quite slow and probably will just take us back all the way to 93 or 93.5. Much of the uncertainty that was holding the dollar is now off. So the election is over. We know the outcome. As much as Trump doesn't want to accept defeat, we know ultimately he'll leave White House. So we know the new election, the new president. So much of the uncertainty that was in the market is coming out, and the dollar is pricing that. So I'm looking for this market probably this week, next week. I think we could get a breakout to the downside and a sell off to 90. If that doesn't happen, we could get a pullback, but probably will just take us back to, like I said, 93.5, 94, and then the sell off. So for me, what I'm trying to pass along is I think the big money in the dollar will be made to the downside and not to the upside. So that's the big move for me. That's why I think markets will be moving huge percentages, and I want to bet in the direction of the trend, not against the trend. So I'll stop there. I think I've shared quite insightful analysis, so you can look at it, incorporate it with your own, and then you can know how to make your decisions in the markets. So for those who will be starting their funding, I think some people have actually started. So we're just watching, seeing how you guys are managing risk, how you guys are making decisions. And for those of you who want to join, feel free to look for us, and we'll guide you into how to look at markets. So we'll see you guys next time, and we'll see you on Friday. Let's see how the dollar will have performed by then, and some of the trades I have, and hopefully I'll have made some money. So we'll see you guys next time.